Hi guys, welcome back.
Wow, what a great rebound day today. Some people are wondering if it's time to add back all the long positions. Is it a reversal happening right here? The market is super volatile. One day up, one day down. Last Friday, it was because of the news on Russia invading Ukraine anytime this week, and then President Biden is calling all the US citizens to come back from Ukraine as an emergency, right? And then today, the news said Russia already retreated the army from the border. Then no war. Everybody's happy. Market rise like crazy. This is why I said I'm not trading with news. I only watch news for entertainment purpose only. And right now, the only thing I can trust is the technical analysis because it can somehow give a hint on what the money is really doing instead of what they're saying, right? Last week, the market was growing with the fear of expecting the CPI. So I make a guess on Tuesday that the market will continue running up until the CPI number is out. So then everyone thought that the bad news is over, the worst CPI report is out already, so we can start to buy in, and it only lasts half a day, the good run up, and started to come back down. And then Friday, it was the news of the war that scared quite so many people. Anyways, I think the news right now that's going on is just the tools for Wall Street to take advantage and manipulate the market and drive more volatility of the market so then they can make more money. So last week I anticipated a short-term run up, but overall my view on the market has not changed. I said I need to see S&P 500 to close above the 30 MA, which is around the 4530 level for more than 2 weeks. For the last and it's been 2 weeks in a row that it went up and closed below. If it's a false breakout, it would be worse than never pushing through. So let's see. So for now, my medium-term view on the market has remained the same. I think there is nothing wrong to be more cautious, just in case, right? Well, at least this lack of conviction on the market in the medium term had helped me grab some nice profit with UVXY for the past 2 days with over $30,000 profit. I did not know on this day that there would be war coming. I just thought the rally last week, the gap up was a bit suspicious to me. So I added the hedge against my long position as an insurance. But because the profit was just too attractive, so I had to take it. So this morning, the news drove the market up. Russia says some forces pulling back amid Ukraine crisis, right? So that is great news. Nobody wants war. Everybody's happy. But I need to remind you that the news about war had helped gold make a strong breakout last Friday, right? And the news this morning saying there's no war after all, it did not make gold fall back to the price before the news. So gold just make a breakout and back tested this morning. Seems like it's still getting supported by this trend line, not a false breakout yet. So does that mean the smart money is still being fearful right now? That is something worth paying attention to. Another one is the VIX. It had a big run up last week because of the news on war, and right now it's not back down to the level before that news yet. So we can keep monitoring that. So I thought as long as the money is still fearful, there should be the use of gold. So I think gold might have a possibility to outperform the market or other commodities as the number one choice to hedge against fear or black swan news. Because right now, yeah, sure, the war is off. But who knows if there is more black swan news coming out of nowhere. Feel like 2022 is a year for black swan. So today I took advantage of the gold's backtest to add more GDXU, the triple leverage ETF for gold. So in case if gold really dropped below this level of 1830, I would consider it a false breakout and I would cut loss for the position. And then I would think maybe the smart money is getting less fearful. They might start trusting the market more. But even so, there is some good news I'm seeing right now is that the US 10-year Treasury yield might have reached a recent top for the short term. After a strong run up all the way to 2.06, I think we might be seeing some divergence here and might be seeing some pullback. So that means in the short term, there should be some relief for the tech stocks or a lot of growth stocks, the medium to small caps. Another good sign is that we see the CWEB has been holding through very well, somewhat quite stabilized, even with so much volatility of the US market going up and down, like Nasdaq, 3% up one day, 4% down the other day. But even so, the CWEB has been still holding through. FXI also has been mainly consolidating, forming a good bottom here. So while I don't feel safe about the US stock market, I do think the Chinese stocks have been forming a good bottom, and we start to see more and more capital flowing in. So in the meantime, I think we can take advantage of the Black Swan news to catch every dip. And also, another good sign is that it seems like the market breadth is stretching. So a lot of the medium to small caps Chinese stocks are also finally catching up the momentum following the rebound of the big techs. A few weeks ago, it was only the big techs that were rebounding, and now it's also stretching to more growth stocks like Bilibili and the EV sectors like NIO, Xiaopeng, and Li Auto also enjoying the good run up recently. So it seems like it's finally starting to stretch to the other smaller caps, not just the big techs. Now, in the end, I want to talk about briefly the fear and greed index. You know, I monitor this every day. We have been in fear level for a while, at least a few weeks. And I see a lot of people saying that since we are so much in the fear level, that means it should be a good opportunity to buy the dip. I mean, this is also why I have been monitoring this index every day, and especially since the COVID crash in 2020, every time it's at the fear or extreme fear level, it turned out to be a perfect buying opportunity, right? Worked like a charm. And I would say that the fear level is a very good indicator to buy the dip in a bull market. But it doesn't have to be this way in the not so bull market. So I guess it really depends on whether you believe right now is still a bull market. Now, I'm not saying we are at a bear market, but I would say the bull market has been put on pause since we broke below this blue trend line that has been supporting it for the past 2 years, ever since the COVID crash, ever since the unlimited QE from the Fed. So I would say yes, buying on every dip at the market fear level, it's perfect opportunity when we are at the bull market. But when we are not at the bull market, but if we are not in the bull market, things would be a different story because it's countering the trend. And it would be similar as selling every time you see a greed level in a bull market. Like over the past 2 years, most of the time it's in this range between greed and extremely greed. So if you sell every time it's at the greed level, you might always end up selling in the middle of the rally because most of the time it's in the greed level. So I think buying in at the fear level when we are out of the bull market, it's kind of the same thing as selling every time we are at the greed level when we are in the bull market. So at this point, I think the fear level is not a very good indicator at this moment until we get back above the trend and the bull market continues. So that is my point. And I would love to hear your opinion, whether you agree or disagree. Now, that's it for today. Hope everyone enjoyed the Valentine's Day yesterday. And also today is the Chinese Valentine's Day. So everybody, happy Valentine's Day. And if you have enjoyed this video, please give me a big like and write me a great comment. And I will see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.